Hi, everyone. I'm Anne-Marie Green.
And I'm Vladimir Jute. Thanks for joining us. U.S. stock markets tumbled to a halt earlier this morning, compounded by global concerns over the coronavirus and an escalating oil feud. Right now, the big board is down 6.47%, some 1,600 points. At one point, it was down over 7% on the Dow. It's 7% on the S&P 500, which, as we pointed out, led to a temporary halt in trading. Let's get straight to markets reporter for Axios, Courtenay Brown. She's joining us now on the phone to talk more about what is happening on the street this morning. Courtenay, what are you hearing from traders? What are you hearing from your sources about the sentiment out there in the market?
Hey, good morning. I spoke to an investor this morning that said that what's happening right now is a full-on panic. The way he described it was investors are, quote, detached from reality. And I think that resonated with me. I mean, the New York Stock Exchange put in these circuit breakers. They implemented these rules after the financial crisis, and we haven't tripped them since then. So today is the first day that we've had to halt trading because of steep declines.
So what's at the core of this? Because Vlad and I often talk about whether it's fears over the immediate disruption of the coronavirus, sort of the short-term disruption, or concerns about long-term disruption. Should we see something like the coronavirus emerge again next year? Is it oil? Is it the president's tweeting?
Yeah, I think the answer to that, and as many investors have told me, is like people don't know. And I think that's the scariest part. No one knows what's happening right now. So we had the unknown of the coronavirus in the backdrop for the last 2 weeks, which kind of triggered this stock market correction. And now we have this oil price war between Saudi Arabia and Russia, and that's not making things anything better. So I think there's just a lot of fear and a lot of, unknown happening right now, which is causing the massive sell-off.
And so the question, I guess, for a lot of investors, Courtenay, is how the foundation of the U.S. economy and the long-term prospects. In other words, you could see where, the market is sort of clawing its way back here, still down 5.8%. But as you said, that could, between now and the close of the market, we could see all sorts of gyrations. And I wonder, as investors are pondering what to do next, can they at least have faith in the U.S. economy remains strong, or are we starting to see cracks in a potential recession, a looming recession, based on the fact that, the Feds can only cut so much, interest rates are historically low, and yet when it comes to people who are sick, airlines who are not able to fly, or people who are not taking cruises, or people who are not taking vacations, people who are not going out to restaurants, that is ultimately what powers an economy. And if those things are not there, then that could be trouble.
I think what folks can take solace in is the fact that the economy, before all of this started, was very strong. We got the jobs report on Friday, which was just absolutely stellar. And, the other thing is the stock market is coming off record high levels. So in a way, we're falling on a softer cushion than we would have been had the economy not been so strong. But all of the things that you just mentioned, Vlad, are risks, right? Folks not going to concerts anymore, not leaving their homes, not eating out at restaurants. I mean, those are all risks to the consumer side of the economy, which has really been the driving factor of this economic expansion.
Is there a possibility that, sometimes, particularly when there's a lot of news coverage about an issue, there's a heightened sense of the impact that it's having? Is there a possibility that, the coronavirus and how we deal with it just sort of becomes part of the way we are living now, right?
Yeah.
That I don't want to say it peters out, but people continue to test positive, but it doesn't have such a disruptive feeling that as a result, the stock market will sort of level off.
I think certainly that's a possibility. One of the things we reported last week was that this is not a financial crisis. This is not a financial problem at its core if we're talking about the coronavirus, right? So folks at home might see the stock market plummeting and be more afraid about the prospects for the coronavirus. But what the stock market's doing and what's happening with the coronavirus are two totally separate issues. When we talk about what the Federal Reserve can do as far as monetary policy is concerned, that's very limited. This is a fiscal problem. So this would need to be solved, investors tell me, this would need to be solved fiscally, not on the monetary policy side.
All right, Courtney, as we continue to see the market down about 1,400 points, down 5.5%, at one point down 7%, we'll keep an eye on what is happening there. And certainly if we get a chance to talk to you again, that'd be wonderful because you definitely provide some clarity and insight for our viewers. We appreciate it so much, Courtney.
Yeah, thank you so much.